What's up, guys? Welcome back to 2024 Mentorship. Today is Fair Value Gaps video part 2. We're going to be going more into depth. It's going to be a shorter video because it's not too much to cover, but basically I just wanted to get this out in a separate video just so you guys don't get confused, because now you guys already know what fair value gaps are. Like I said, it's an imbalance in the market. Price is drawn to these areas, and normally once it's rebalanced to it, it will continue in the direction. Now, what I went over in the last video is why do some fair value gaps work while others don't? And I wanted to answer this very simply. It is simply because of the draw on liquidity. And what does that mean? Essentially, that just means that price goes where liquidity is sitting, right? And if price has already taken out a certain liquidity spot, of course, a fair value gap is not going to work. And now this kind of goes into your daily bias, is which fair value gaps are being respected and which are not, which fair value gaps are being ran through. This kind of gives you a clearer direction on where the market wants to go that day, especially if you're looking at like the 4 hour, 1 hour. If we're running through bullish or bearish imbalances, chances are we're going to be heading in the other direction. So this is just because of liquidity, and I want to show you guys an example because it's kind of hard to explain it, but it's easier if you just see it. So this is a perfect example right here. So we have sell side liquidity, right? Sell side liquidity sitting here. We've been pretty bearish, right? And as you can tell, it's been, let's zoom out. This is bearish. We've been pretty bearish. So in order for price to continue higher, what do we need to see? We need to see liquidity being swept at the lows, an impulse move up, and something being disrespected. A bearish fair value gap getting disrespected. All throughout this, we have not respected a single bullish fair value gap. Sure, this gets respected, but guess what? It just gets ran through. Not a single bearish or bullish fair value gap gets respected in this entire timeline. Until here, what happens? Every single bearish fair value gap is being respected. As you can see, even these ones are being respected. Right? This one. All of these are being respected. Okay? We're respecting all of these imbalances that are bearish. However, what do we see here? We have resting liquidity. Sell side liquidity sitting right here. Come up, come up, come up. And we sweep it. Right? And now this is also what I went over in my model. I posted it into the private chat. Basically my strategy. This is what I'm talking about. We swept sell side. But guess what? Sometimes we need to sweep again before we can head higher. And that's what we do. We get a run on liquidity here, right? Now, what is our clear vision? Like, what is telling us 100% we are ready to move higher? And I think personally, the most clear indicator of that is when we flip from respecting bearish fair value gaps to completely disrespecting them. So now to go back to this, why do some fair value gaps work while others don't? Simply because of the draw on liquidity. What happens here? We have just swept, right? We have just swept external sell side, and now we just swept internal sell side. Price is ready to move. What is the last thing I want to see before I'm like, okay, I'm 100% convinced we are bullish structure the market structure has shifted. We are now bullish. I'm expecting longs. I want to go long. Where do I get in? This is how you know. The moment you start seeing bearish imbalances, bearish fair value gaps get disrespected, what happens to this fair value gap? Price runs through it completely. Let's go down on the lower time frame. Price completely disrespects these fair value gaps. Completely runs through it. This one ran through. Okay? And what are we seeing? We sweep liquidity. Okay, boom. Now we need to start seeing bearish fair value gaps get disrespected. We even have here market structure shift. We have a breaker structure. Perfect. Okay. What do I want to see? I want to see this fair value gap get disrespected. Okay? That is what I mean. This is what I'm talking about when I say that fair value gaps are so important, because it literally tells you where the market wants to go. which fair value gaps are being respected, which are not. You can literally tell. We're disrespecting this fair value gap. What happens? Complete change in market characteristics. We are now in a complete bullish market, right? And it's so easy to tell because we're starting this entire move down. What have we been doing? Let's go back to the 5-minute. This entire move, and what I mean by the entire move, I mean this entire move from all the way up here to here. This entire move, all we have been doing is respecting bearish imbalances. Not a single bullish fair value gap has been respected, right? Look at, we have a bullish fair value gap right here. What happens? Does it completely shift the market back up? No. We buy up a little bit and we just get ran through again. Ran through. Another one. Here. Oh, here's a bullish fair value gap. I'm bullish. Let's go long here. Yeah, okay. You're in long. What happens? Smashed. Ran through. The moment you start seeing a change in that, because look, this entire time we're just respecting bearish fair value gaps. Even here, we literally, all there is here is bearish fair value gaps, and that's all we're respecting. What does that tell you? As a trader, that should tell you that the draw on liquidity is still lower. Once you start seeing bullish fair value gaps start to be respecting and we start seeing market structure changes, that is when you should say, okay, I'm flipping my bias. But until then, that is why I'm telling you, fair value gaps are so important. It literally tells you when the market is ready to move and when it's not. We're still, this entire move down, we're only respecting bearish fair value gaps. Until what happens? We sweep external draw. We sweep the external draw right here. Bull. This is all accumulation, manipulation, distribution. Simple stuff. Okay. We accumulate price. We manipulate lower. We manipulate again, which is what I talk about in my PDF. It's in the private chat. Price sweeps this. We move higher. How do we know we're ready to move higher? We disrespect this fair value gap. That is what I'm saying. This is how you know which fair value gaps to use and which not to. We just swept external and we just swept internal sell side. Why would you short this? Why would you place a short order in here in this fair value gap? There's no reason. We swept external and we swept internal liquidity. There is no reason to go short now. We have just swept two main important things. This is what I'm telling you. When the market wants to go, it will sweep external and then it will have an internal manipulation move. Normally on the 5-minute and under is where you will see this. That is what I'm talking about. This fair value gap, if you short that, you're asking to lose. There's no reason to go short there. That's what I'm saying. This is what you need to know. It is all about liquidity. Once we sweep external and internal, your bias should flip. You should not be looking to short here. And this happens all the time. I don't feel like going and finding all these examples because this is the only example you need, because this happens all the time. Not this exact same setup, right? But we sweep external and then we sweep internal. And then people still go short here. People still go long. Why? There's no reason. We just swept external liquidity. Okay? Sell side was swept, and then we had a manipulation move on the smaller time frame. Why would you go short there? Literally just terrible trade, terrible entry. Wait to see how price reacts to that fair value gap. 99 times out of 100 times, once we sweep external and internal, meaning external is this, right? In case you don't know what I'm talking about, if you don't watch the liquidity video. External, meaning this, right? We have the external draw of the range. We sweep that. Okay, we swept it. Perfect. Internal, meaning the internal draw. What is this? This is just simple stop hunts. So clear, right? Market, huge candles. This is what you want to see when you're looking for a change in market structure. This is what you're looking for. These huge candles coming out of a recent sweep. That is what you're looking for. This is such a clean model right here. External draw is swept. Internal draw is swept. We're disrespecting bearish fair value gaps. We just swept sell side. We just swept it. Externally and internally we swept sell side. And now we're disrespecting these fair value gaps. This is what I'm talking about. That's why I'm saying fair value gaps are so important, because it literally tells you when the market is ready. If the market is continuously moving down and it's continuously respecting bearish fair value gaps, but it's disrespecting bullish fair value gaps, that's how you know the draw is still lower. Find the clears. Where is the clearest draw? Where is the next draw on liquidity? Find that and go short. Okay? Once it hits that, wait for bearish fair value gaps to get disrespected. And then you say, okay, we've disrespected our first bearish fair value gap. Right? We just swept external. We had a manipulation move internal. What are we looking for? What are you waiting for? This is what I'm talking about, guys. Fair value gaps are the most important thing you will ever learn. Telling you it's all you need. It's really, honestly, it's kind of all you need to know. Honestly. If you can just be patient and look for fair value gaps and see which ones are being ran through and which ones are being respected, you can find the draw on liquidity so easy. That's why when I do my daily top-down analysis for the week and for the morning, I always look at the fair value gaps, which are being respected, which are being disrespected. And then I go into lower time frames and I look for internal manipulation inside of that larger time frame fair value gap. That's what I write about in my PDF. Right here, I wrote about this. My crystal ball strategy. It's not so secret, but it's in there, right? Everything's in there. This is what I talk about. It's all about where's the external draw. Okay, external draw, we just took it out. You should be watching this. No entries. There's no entries here. Some people might go long here. No. Once you take the external draw, trust me, guys, 9 times out of 10 times, once you take the external draw, it will take it again. Wait for the internal move. Wait for the break of structure. It will dramatically increase your win rate. That's why I'm saying fair value gaps are so important. You guys really need to get this down, because it is simply like, it will take your trading from like a 7 out of 10 to a 10 out of 10. You need to learn fair value gaps. This is why this video is so important, because what is this? Bearish fair value gap. What have we been doing this entire time? We're trending down, respecting every single bearish fair value gap. What happens when we disrespect a bearish fair value gap? Let me show you what happens. The first bearish fair value gap that's disrespected, this is what happens. Okay? You're talking, I mean, you're not going to catch this move ever, but come on. You know what I'm saying? Like, this is what I'm talking about, guys. They're so important. Literally the first bearish fair value gap that's disrespected, and we get this. Okay? So you can ignore it or not, but fair value gaps is probably the most important thing you will ever learn about trading. That's why this video is going to be so important. Please watch video 1, because I didn't really go over too much about fair value gaps in this video. I'm just wanted to give this brief example. And you'll see this. Which fair value gaps are being disrespected, which ones are being respected. You will find the draw on liquidity very easy. I know people have all these different methods on finding the draw on liquidity. Like, oh yeah, the daily candle closed below the top of this. Like, I don't do that. I simply look at fair value gaps, which is being respected, which is not. Wait for an internal manipulation, and you will see. Now, back to this question, why do some work while others don't? Well, that's what I just explained. When the draw on liquidity has been swept, the fair value gaps that you were looking at will no longer work. Because once external is swept, every single bearish fair value gap anywhere in this range will not work. It won't work because the draw is now higher. Now, they might work for an internal model, okay? If you go down to the 1 minute, right, you can probably find an entry for shorts, right, on the lower time frame. However, I don't really recommend that. I know a lot of people like trading internal models. I do too. That's what I do, right? This is technically an external model. Right here is technically an internal model because this is a lower time frame. However, you're going to get your highest win rate, your best trades, your best risk to rewards. Look at the fair value gaps. Trust me. Look at the fair value gaps. Which ones are being respected? Which ones aren't? Like, it's just so easy. It really is. Like, all you need to know, not all you need to know, but a big part, just learn fair value gaps, guys. Like, watch the first video, watch this video. I didn't go over too much exactly what fair value gaps are because I already did that in the last video. I don't need to in this video. You guys should already know. They're very easy. Fair value gaps are so easy to see. You can see a million everywhere you go. Here's one. Let me turn off this stupid. Here's another one. Bullish. What happens to this bullish fair value gap? Ran through. Ran through. All these bullish fair value gaps ran through. Here's another one. Ran through. Ran through, ran through, ran through. Every single bullish fair value gap is getting ran through. What does that tell you? The draw is still lower. Okay, we just swept liquidity. I'm going to go long here. In this fair value gap. No. You get stopped out. You got stopped out. Why did you get stopped out? Because I'm telling you guys, after external liquidity is swept, I'm telling you guys, 9 times out of 10 times, there will be another manipulation move before we head in the opposite direction. In this case, before we head higher. Right? Look at the fair value gaps. Which ones are being respected, which ones aren't. To answer the question is why some work and some don't. It is a simple answer. It is literally because the draw on liquidity has been swept. Okay? Whether it's external sell side or external buy side, whichever it may be, has been swept. Once that happens, none of those fair value gaps that you've mapped out earlier are going to work. And if they do, it is a very rare chance that that happens. That's why I'm saying, like, trading is a game of probability. 9 times out of 10 times, once the external draw is swept, the previous fair value gaps won't work. They won't be respected. They will be disrespected. In this case, we swept the external, but we also had an internal manipulation move too, which is fine. Well, that's what I'm saying. Most of the time when external draw is taken, we still have an internal manipulation move before we can head higher or lower. All right? Just learn this, study it. Fair value gaps are important. There's plenty of videos out there. Learn this. It's super easy to learn. Simple answer. Some of them won't work. Why? Because the external draw on liquidity has been swept. There's no reason for those fair value gaps to even work. There's no price is not drawn to them in the same reason it's drawn to an unfinished fair value gap. Those are just nothing. They become nothing. Once the external is swept, those fair value gaps don't exist. Don't even look at them. They will get ran through. That is a simple answer. Watch this video. Watch the first one. That will be it for this one. Next video I'm going to do is on... I want to do another liquidity video, but I also want to do a standard deviation video. Because especially that we're at all-time highs, it's super important to know about standard deviation. And I'll explain that actually in the video. So yeah, I'll make a standard deviation video. It's very important. Anyways, that'll be it for this video. See you guys Monday.